The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 24th, terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial in. Now is not too soon. 877-927-6648. Of course, if you can't dial in, you can always send me an email, steve@tfnn.com. Inside that heading, just put radio show question, and we will get to your request out there. And, of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading down 8 points, S&P off 2, NASDAQ 100 down 25, Russell 2000 is up 3 points. What's up with that is what I say. You got the semiconductors off a couple of points. Gold's down $1.70, silver off 8 cents. Light sweet crude down 2.5% as we speak right now, trading out at 47.21. The move to the upside dollar-wise, individual stock-wise, and Signet Jewelers up $9 or 18%. Chipotle up $7, Dollar Tree up 6, PVH Corp up 6, Rockwell Collins up 5. To the downside, Amazon leading the charge off $13, 1.3%. Smuckers, JM, they're down $10 or 8%. Google's off 1%, nearly $9. Stamps.com down $5 or 2.5%. Let's begin the day, though, by taking a couple of questions that we had by emailers out here. And the first one is for Larry. Now, Larry wants to take a look at a ticker symbol here called GMO. That is General Molly Inc. For those of you that have been out to Colorado and doing the trip between Denver and, Vail, or any of those cities out there, those great ski towns out there, you've probably passed by some of these mineral mines out here, and that's what General Molly Inc. does. Now, the equity, and hey, I'll say congrats to Larry. He's in the stock at 39 cents. It's trading at 46 cents. But the questions are, hey, and you're looking at holding this for the long term, right? And you've targeted $1.97 on a monthly chart, 72 cents on the weekly chart. So let's first just go take a look at those time frames. Let's just switch over to the weekly time frame out here. And what you're going to be able to see is the $1.97 area. Where the heck did that come from? Let me see out here. Where's a $1.97? Can I find it? I can't. So because one of the things that here, I guess here's my take, Larry, and here would be my suggestion for anything that for anything that trades that's less than $1 out there, and you're looking to hold for the long term, and you're trying to find some other spots to buy. I think you just have to take a certain percentage of your capital and figure out what it is that you want to go ahead and risk on the trade, and this just simply becomes an unexpired option out here. When you see equity like this that has basically very little liquidity in it, on average, looks like it does 30,000 shares. I mean, it has days where it does 100,000 shares, but 20,000 shares. I mean, there's just no real liquidity. It's a penny stock. It can be pushed around. If you have a real bullish outlook, longer term out here. By the way, where's this stock likely headed to next? Well, if it can clear this high volume individual day from June 9th, which is 53 cents, then just like any other equity, it should target the previous swing point, which is February 16th in the 72 cent area. But I don't know how you time these less liquid type stocks that are trading for less than $1 out there. I think you just say you want to invest $2,000. You're willing to risk $2,000 or $10,000 or $5,000 or $100, whatever it is, and just simply buy that number of shares and just stick those in your briefcase or your vault, whatever you might want to do. I mean, on a monthly basis, I don't know what this equity was doing back in 2007 up at the highs. You know, it's $12.58. 12.35 out there. You've even got just simply the highs in 2010 at $7. So if you are just simply, you know, it sounds like to me from your email, you've been watching this and you have reason to believe that these mineral companies are going to move much higher. Just do that. Don't get carried away in trying to do some technical analysis on a stock where there's no liquidity in it. That's just my opinion. So I hope that assists you with the thoughts out there. Just pay attention to those swing points, I suppose, with regard to target areas. So that was for Larry. And let's take a look at James wanted to look at a ticker symbol. PDCO is the ticker symbol. That is Patterson Companies, Inc. And I believe James is looking for an entry point into this. Just for the heck of it, we're going to put this on a weekly chart and get a feel for what this is doing. Not a lot of folks having fun inside this equity. It really has been in a consolidation type pattern here. And I don't know if today is really the time to get into this equity. Let's go see what it's doing, because you can see it's making a series of lower highs, a series of lower lows. This week, a lower low out here. The volume that it was going against, and it may find support, was the week of November 21st. That had volume there, 28 million shares. The low was 34 or 36.46. You've tested it. You've rejected it. It's on lighter volume. You know, but is it a reason to come into this equity out here? I don't know, but let's do this here. PDCO. Let's just see if we can figure out anything else that maybe it's doing down here towards the towards this bottom. Is there any pattern that we can see? There is a no. Okay, here, let me just say that. But today, it does have a gap to the upside. There is an A to B equals CD pattern out here. So I guess I can't just say no, but there was basically no retracement. There was no retracement. I'm going to have to use the same swing point low and top for the B and C point. I kind of hate doing that. So it's not really much of a retracement. So it's hard for me to say, yeah, there's a clear A to B, well, clear lightning bolt on this. I look for Tom to mark counts for you on this, and I don't see that either. You know, prices trading above right now. It's oscillator on change line. It's a slight positive out here, but I just don't know if it is enough. PDCO. It's below the weekly profiles, that's for sure. Let's put the daily chart up here, and I would have to say you need to wait for a sign of strength, and I don't think today's session is a sign of strength you're looking for, James. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back. Dow's up 20. S&P is flat. Phil wants to go take a look at Vivint Solar Inc. VSLR is the ticker symbol. So let me see here. Hi, Steve. But solar stocks seem to be getting a bid. Bought this after flagging in a base and 100% move up of the lows. What do your tools say? So let's go take a look at a couple sets of tools out here for ticker symbol VSLR. Now, in this case here, so back to James. James, I don't see the buy entry point inside of that equity. I'd rather you be like Phil and take a shot at something like this. You're going to see it's going to be a little bit easier to call with regard to risk reward and what the stock behavior is doing. And here there is a sign of strength inside of this equity. Let me pull it back just a bit. So we can see the basing that Phil was talking about. So the accumulation that was going on. That accumulation was going on between a price of about $2 to $3.62 out here, right? So you have that little, and if we just turn off the market profiles here, let me just do this. Let me turn those off. Let me put this on a weekly time frame. Just simply it'd be a little bit easier, I think, to visually see. Well, maybe not. If we take a look at, that little kind of accumulation, consolidation that was going on inside of this equity, we'll call it this range. And once that range was broken, then we can take a look at where price actually got up to. We're going to see that there's your measured move, your 100% measured move. So when price stopped where it did, looks like the week of July 3rd, it actually did what it was supposed to do, right? You have a measured move when you break a consolidation pattern, sideways consolidation patterns. So now let's go back to the daily chart out here, because we can also see on the weekly the sign of strength. So we take a look at the sign of strength. That was accelerated volume, wide-ranging bar out there. And when we took a look at the weekly, and in the case of the daily, they're wide-ranging bars as well, because you want to go ahead and fill in the gaps, so to speak. And the actual breakout inside this equity, which it does not look to me like it's going to come back to, the breakout would have been about the June 15th, the June 14th area, and that's down in the 350-ish type range. All it did was able to get back towards that that last gap, so to speak, the big gap with the big price spread, which was 4.2 million shares out here. So it came back, in essence, into that gap, never really touched the top of the session from June 19th, 435, but it got inside that gap. And now today you're seeing a move. So it looks like what this equity here, VSLR, is doing is trying to set up an A to B equals CD pattern. It's either setting that up or it's going to head back to that little bearish engulfing candle, the B point, 609. This is at 497. It looks like that is what it is doing. Now, how can we say that's what it looks like? That's what it looks like it's doing out there. Well, I guess when you have the mic, you can say anything you want. But besides that, if we take a look at daily profiles out here, you're up above the brand new one that formed today, top of 482, low of 464. So you've got some support, not too far below, in essence, where you're at. So that's a good positive. If I look at the weekly set of profiles out here, you're not up to them yet. Odds will improve that you'll get to that B point, that 609 area, if in fact this equity can clear and stay above 515. So there's a great song by who? That's what I'm asking. Who sings that song, 515? Somebody out there knows it. And that was a little Abbott and Costello kind of play on words there. And but if this thing can get back above the weekly TAS market profile, then that's a pretty good indication for you that, in fact, price is going to get up into that 609. Whether it will fulfill that outcome of an A to B equals C to the upside, I don't know. That's this set of tools. So, Phil, let's go look at a secondary set of tools. Let's go look at Stevie's red line out here. Let's go look at the price oscillator, a beautiful thing. As we know, when price is above Stevie's red line, when the price oscillator is above zero, there's nothing more bullish than that. And we can see the last time that this thing moved, VSLR, daily chart, really moved off the low, it, in fact, was doing those same two things out here. Now, when price pulls back, it pulls back right to the zero line of that price oscillator. It did that yesterday. That's the bottom panel you're looking at. And now today, assuming it closes above 482, I don't know where it's going to close, but this is what you're looking for, Phil. Okay, you want to see it now stay above Stevie's red line, because now we have what is that normal outcome when the price oscillator starts to get towards that zero. We start to see price start to move sideways. That is what was taking place out here, and we wait for a test of the red line. This is the red line, folks, that you can take action on. And yes, Gator, it was The Who that sings that beautiful song, 515. Now the question's going to be, what album did that come off of? Spin the vinyl. In this case here, was that Quadrophenia? Could it be? But getting back to this chart out here, this is the perfect setup that says, as long as there's a close above 482, that this is now a buy. So if you're asking what do my tools say, these tools say, hey, congrats on the entry in this. Do not let price close below Stevie's red line. And the reason is, just as there's nothing more bullish on a rising price oscillator above zero, there would be nothing more bearish in this case to see that price oscillator start trading below zero. The same time, and all that would mean is you could come back to the original breakout area. But at this stage of the game, we're going to go with what we have here, and I'm going to say, great trade. In fact, those of you that are looking to get into a solar stock, I think you could follow Phil out here and just use those parameters that we looked at, or at least wait to see how this equity closes, and use Stevie's red line as your gauge out there. And yes, it was off of that Quadrophenia album out there, and I can't tell you how many times I listened to that tune. And then, of course, it's even on my phones and iPads and stuff like that. Okay, I don't see any other questions out here. And since we spent some time going ahead and talking about Stevie's red line, let's take a look at what's going on inside the equity futures contracts on the daily charts out here. Because as we speak right now, what we've had over the last couple of days out here, and this is a beautiful, by the way, this is a really beautiful bottoming pattern. Is it a bottom? I don't know. But if we take a look at the NQ, you take a look at these four candles out here. You got this nice long red body, long down candle out here. Then we have 2 days of small bodies that are at or below the close of that long red body. And then we have a tall green body out here. This created, even though it's not going to be marked out here, this created what the morning star pattern out there. referred to as the Three River Morning Star, but it can occur with 4 candles or 5 candles. In fact, if you go back and take a look at the S&P 500, and you'll take a look at the bottom formation that was formed out there in March of 2009, and along the way several other times, you're going to see that this is the pattern. Sometimes it was a 4-candle session. Sometimes it was a 5-candle session. So it is very strong, and we know that the prior swing point was tested with light volume. But here's the deal. Price is struggling to get above Stevie's red line. If it can close above Stevie's red line, right now, 58.7846, play with it for $1 or so. If it can do that, we go back up to the highs from August, or in this case here, July 27th out there. And if it can't, well, we're stuck in a little bit of a range out here. It's not clear. It's just not. We know that there's strong support down here at about the 57, 58 level. The bottom of that 4 River Morning Star. Steve Rhodes, TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So judging by the emails out here, we have a bunch of fans of the detours out there. Now, do you know who I'm talking about when I say the detours? out there. That would be kind of interesting. Now let's go take a look at the S&P 500 out here. We were looking at the NQ. Let's just switch over to the daily cash indices out here. And you're going to really see the same type of pattern. The difference here is you're going to see an A to B equals CD to the downside that completed out here. So coming off of that high, well, I'll come back and I think that was August the 8th, but just to make sure, there's your 1-to-1 A to B equals CD. Out here, there's your high back here on August the 8th. So you've got your 1-to-1 A to B equals CD. We know that the pattern doesn't complete until the cavalry arrives. And there was a bullish engulfing candle that formed on the 21st. That was your signal. And then you had that nice little gap to the upside. That would be your second bullish signal. And those 4 candles also created that 4-river evening star. Here we can see the 3-river. That was the candle sessions from August 10th, the 11th, and the 14th out there. So we really know where it is that the bulls are hanging out. And we also know that based on the candle session from July 7th out here. So we know that this is protected. This is holy ground out here. And in fact, if we see it close below the low of the session from August 21st, that would reveal a lot of information to us. But what we also know at this stage of the game here, we're seeing just a small series of higher or lower highs and lower lows, very small. What we also know is price has not been able to get above Stevie's red line. Now, I don't suspect that over the course of the next day or so that we're actually going to see that occur. We could. I'm not suspecting that we will. I'm suspecting that just as we took a look at that solar stock, I forget the name of it, but that Phil had presented to us, just as it was also testing the price oscillator line out here, so too we're seeing here at about 1.83 is the number. You're going to see another number. Well, maybe I can do it. It'd be better if I do this, probably, right? If I open them up. There we go. So there, now you can see the 184. You don't have to worry about that. The bottom panel out there is my little price relative strength divergence indicator tool, and I like to hide it because I just need to know what's going on inside the chart. But here, when you take a look at panel 2 on my screen, you can see you're at 1.184, and you can see we're very close to 0. So just as you and I and Phil learned about that solar stock and the way that it behaved, we're going to anticipate that because we still have a falling price oscillator right now, that we're going to see that get down to the 0 line. And this is where the S&P 500 is going to communicate to you and I. Should it unfold this way? Should, in fact, that price oscillator get down to 0? And then we see a test of Stevie's red line. Now, unlike the solar stock, if the like the solar stock, if the test is we get up to the red line and we turn back down, price turns back down, that's going to be a very bearish message. It'll be very bearish and remain that way until you see price close above Stevie's red line. Is it that simple? And the answer is absolutely. We do not need to complicate this stuff. It is that simple out there, at least with regard to giving you a signal and on a daily chart, not necessarily an intermediate time frame chart out here. Likewise, because we have this nice bottom that is formed with these nice candle sessions out here, if in fact price closes above that red line, and I would say, even if it does it before we see the 0 line test out here, you've got to go with the call. And the call is you're back to bullish. And you're back to bullish, and you're going to head up and test that August 8th high. Are you going to take it out? I don't know. It could just be nothing more than a consolidation between that level and the 24, just call it 2400 area, 2405, 6, 7, 8, somewhere right around there. And that's what the S&P 500 is doing. If we take a look at some of the other indices out here, as an example, let's take a look at the NDX 100. What you're going to see is you're going to see that price is rejecting Stevie's red line. So we still have this sideways move or retracement going on. We're not anywhere near the 0 line. The reading on this is 1959. Another good year out there. But it's it's not going to be the first one that tells us whether or not this is turned into another move to the downside in this unfavorable seasonal process, or whether so it's really, I think the message comes more from, you'll see here, if we go put up the Dow Jones out here, you're going to see it too way away from the 0 line out here, and I mean way away. And inside the Dow, it is an absolute Gartley buy pattern. And you can use whatever swing point you want in order to create that Gartley buy pattern. You can use this one, the conservative one. You know, the Gartley buy pattern is going to look like this when we have it all colored in. You had your A to B equals CD to the downside. Only basically a 0.618 retracement. That's off a low here from June 29th. And you've got the bullish reversal signal. What we don't have is we don't have what's going on inside all the other markets. We don't have, in this case here, the Dow getting above 2195. But if, in fact, the Dow gets above Stevie's red line out there, there's a pretty gosh darn good chance that you're going to see an A to B equals CD to the upside, at least a small one, if not a large one. And that one would look like this. Whoops. Well, don't do that. Let's actually grab the right swing points out here. Let's see if I can do it. The second time is the charm out here, because we don't want to do it a third time. There we go. And that would actually give you an A to B equals CD price projection. Well, to 22,582. The reality is 22,849 would more likely be the number. So Stevie's red line inside of the Dow is very important. That's 21,952. I still believe at this stage of the game, it's going to be the ES or it's going to be S&P 500. Just simply depends on when that test of the zero line takes place. That's why you want to make sure that you're paying attention to the equity futures contracts, because that, what you and I just looked at out here, could take place in the overnight or early morning session out there. And if we get a nice rejection and price moves higher, then the markets will, in fact, continue to do that. So that takes care of those markets out there. What else do you want to go ahead and take a look at? I'll just take a quick peek out here, see if there's any requests on the request line, and that is the email line. Remember, Steve at TFNN.com. Inside that heading, just go ahead and put radio show question. And we've got one from Tim. And Tim says, oh, Costco. Thank you, Tim. I think you asked about this yesterday. I do not think you did Costco. You're right. And even though I said I would do it right at the open, you caught me. Thank you. That is a wingman out there. So Tim wanted to take a look at Costco, and I believe you were looking to get in on Costco. COST is the ticker symbol. So let's go take a look at it. I knew I forgot something. And, oh, that's pretty weird. Just looking at my other chart out here. Let me see if I can do this here. Please reload all historical data. Go do that. Do that for me. Do that. There we go. Okay. So in the case of Costco, now this is something that, you know, this set of tools that I have inside my e-signal chart, it's not showing you what the set of tools in my other chart. And the other chart right now is really important for us to take a look at. So, Tim, you're looking to get long inside of Costco. And here's what we know. Your favorite pattern, my favorite pattern, where price either moves higher or lower, does with less relative energy, and then the cavalry shows up out there, is in this case here, a bullish bottom signal. And this is when we got that. On this trading day of July 24th, we can see price was moving lower. You can see Stevie's black lines, in this case here, moving lower. But it's not until the cavalry arrives when it identifies the bottom. Now, you and I, we just simply do this time and time again. So you see how well it works out here. So when we come back from this breakout here, let's try to identify where it is that price is headed to in Costco. We'll pay attention to Stevie's red line. We'll look at that price oscillator, because we're in the process shortly of seeing whether or not we can get that price oscillator above zero inside of Costco. Steve Rhodes with TFNN. Right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Hi folks, the 800th edition of the Gold Report will be published next Monday. To celebrate the last 15 and a half years of calling the gold market, I'm doing a special promotion. You can receive 60 weeks of the Gold Report for only $600. That is $10 a week, which is a savings of 50% off the regular price. If you want to understand the entire supply and demand equations that move the gold market, including where the XAU, HUI, and mining equities are looking to trade, if you want to understand the correlation between the dollar, the yen, the South African rand, bonds, and gold, the Gold Report is for you. I'll give you the entry price target, and stop for each equity, ETF, future, or option trade. The Gold Report is a long-term newsletter with the focus on building real wealth to a successful portfolio of gold and silver equities. You can take advantage of this special promotion until August 27th. That's 60 weeks of the Gold Report for $600, which is a 50% savings. Go to the front page of TFNN.com or call 877-518-9190 and order now.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we're taking a look at ticker symbol COST. That's Costco Wholesale for Tim. And Tim was looking for an entry point, or the question was, is now a good entry point for Costco? So we're going to go try to answer that question. First, we're going to do that by taking a look at what is Costco doing right now. Now, as of yesterday, what you saw was a price close above the daily TAS market profile. So on your check mark, that's one up for the bulls out there. And as long as price stays above 158.58, that still remains to be the case out here. 156.29 would be your support level. But now price is going to run into resistance, or should run into resistance, and that's this little bearish engulfing candle. It's a daily chart that we're looking at. So that says that this could find resistance at 162.35. There's volume there of 5.5 million shares. Yesterday you were pushing up into it 1.7, the day before 2 million, the day before 1.8. Today you're at 1.3. So it's not as if you're pushing this area with volume, which would then say, hey, look, if you take that out, then this will give you an A to B equals CD to the upside, which would give you in the price projection in the 167, 171. I'd say it's more the latter, the 171 area, which is really the top of this huge decline, this gap to the downside, this breakdown, which took place on June 16th with 24 million shares. So that, in essence, is going to be an area that becomes a target at any trade to the upside. So that's so at this stage here, Costco is in a bullish mode, has found a bottom, and we're using that based on this chart series here that has that beautiful price relative strength divergent pattern. But we also know that it's coming up to resistance. So what to do, what to do, what to do. There's a couple things I'd like you to consider. Where's the buy point on this? I would say it'd be a test of Stevie's red line. First, that's 156.87 on a pullback. But really what I would do here is I would wait. You can be patient here. What you really want to see is wait to see if what happens when this price oscillator gets to zero. Just like we were looking at in that solar stock, the S&P 500. Sometimes it's best in this situation here because you really missed the bottom. You missed the buy point was back here. It was either the July 24th little bull sash candle or really the next day when you had some follow through on July 25th. And that was at a price point of 153 or 159 right now. And knowing that we have all this resistance out here, it just kind of suggests to you, hey, be patient. especially when we know the price oscillator is approaching zero. Because when it gets to that zero level, we should see price and Stevie's red line meet each other again. And they're either going to kiss and tell. Well, they're going to kiss and tell. And we just want to see from the bullish side a rejection. Price moves off of that, and that gives you, then you start to have a rising price oscillator above zero. Look, you've got to be careful about this 170 area because that big breakdown level, of course, this could easily get into the gap, fill the gap, get back up into the 178 area. So thus far, it looks okay. Now, I did one other thing for you, Phil, that you can consider out here, and that is I went and took a look at Costco. That is the chart on the top portion of the screen. And the bottom portion of the screen, and this is a weekly chart, by the way, the bottom portion of the screen is your little correlation tool or index. And this is being correlated to the S&P 500. And it's over a 10-week period of time that I'm doing it. Now, whenever you see a red bar above zero, zero being the center line out here, it tells you that the two are correlated, right? So we talked about the S&P 500, and when it's below, it says it's moving in opposite directions. You know, maybe the S&P 500 is moving lower, and the Costco's S&P's moving higher, Costco's moving lower, just as it looks like was during the period here of maybe about April 6th through June 1st out there. And right now we happen to be in an uncorrelated period with regard to utilizing that tool out here. But you can see more times than not this thing gets back into correlation. So since we're waiting for that red line test in the S&P 500, since we know we're coming up to resistance here, I'm going to suggest you be patient. Be patient on Costco. Wait till you get a confirming message in the S&P 500, and then maybe you've got the information that you need. Likewise, if the S&P fails and we start to see a falling price oscillator below zero, you may want to hesitate on this, right? You'd like to have the market. You'd certainly like to have the sector. I'm not sure which sector. This is the XLP that Costco is a part of, if they're a part of that. So that would be my take, Tim. So I hope that helps you out. And thanks for the reminder. I know I sent you an email back yesterday and said I would do it during the first portion of the show, and then I forgot to write it down on my pad of paper, of all things out there. Okay, so we've got that. I don't see any other questions out here, just a bunch of junk mail, which means it's not from you, because I want to hear from you. So let's go back. Let's see, we've got a question out here. Steve, is there a Gartley sell in gasoline on the 240-minute time frame out here? Gasola? Is that the question? So what is that on my 120-minute time frame chart out here? That'd be probably the RB, I bet. So let me see here if we can go ahead and pull that up for you and try to. Then we'll switch it to a 120-minute chart. What I don't know, we'll try to find out. We'll try to figure that out here. Let's see. Here's the futures contract. October. Is that right, Danny? There you go. RB on yours too. So okay. So we're good there. What I don't know is, well, how'd that happen? Let me hit this button. There we go. Okay. So Danny, are we? Does it look like it's trading about right? I've got 154 on my systems. That sound about right as far as where price is headed to. So this is the daily chart. We'll go to take a look at the 120-minute chart here, but maybe it's best to first influence you on what's going on the daily time frame chart up here. So, because since you and I have spent so much time talking about Stevie's red line, speaking about that price oscillator, and as we take a look at what the October contract for gasoline is doing, you can see that today it has run right up into resistance of Stevie's red line, which is priced at 155, 1.5574. Now, because that price oscillator is hovering right at the zero, it's actually slightly below it. If price, you say, is there a Gartley sell? You know what? If there's a Gartley sell in there, you're also getting really a sellish type signal here inside the daily chart. Now, that would vanish, in my opinion. That would vanish if you were to see a close above Stevie's red line, because then we start to see a rising price oscillator above zero. And that says that price starts to head back towards either this bearish engulfing area 165 or really up to the swing point, just a tad higher in the 168 level. So watch a $1.55. Now let's take this and turn it into the 120-minute time frame series so that we can try to go find that Gartley sell pattern out there and see what else might be in store for the October contract for gasoline out here. Let's see if we can throw some gasoline on this fire on the daily chart out here. And I've just got to reload, make sure I'm getting all the data out here because that doesn't look right. But maybe it is, or maybe I've got the wrong time series on here. Let's do this. Let me come over. Let me do this. So we know what the daily chart said. Let's come over and take a look at our profiles that have multiple time frames, okay? I'm pretty sure that I've got it here. Pretty sure, but maybe not. Where is it? Where is it? Hey, let's just type it in. Let's do that during the breakout here. This is Steve Rhodes with TFNN. We're taking a look at the gasoline, or we're going to try to at least. We'll be right back, folks.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors. Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So when we left for that break, we were taking a look at the gasoline futures, and it's really the daily chart that's providing us with the best information out here. We don't have the Gartley sell pattern out here because that's really going to require on the 120-minute time frame an A to B equals C to E to the upside. And if we got that, it would be at the 158-ish range out here. And as we pull this stock chart back, it'd have to be a retracement from a higher area. So I don't see the Gartley buy on the 120-minute time frame. What we do have is 155, 1.557 as a resistance area on its 120-minute time frame chart. Let's put this back to the 60, and then you'll have the 60, 240. So the 60 is bullish, the 240 is bullish. The daily has resistance at 156. Remember we looked at the daily chart in my red line area? So there's this real resistance level. And if you close above the daily profile, top of the box, you close above Stevie's red line, then that's a signal that if we go back here and take a look at the October contract, that it wants higher price. And higher price in this instance here is either going to be an A to B equals CD to the upside, and that'll only occur if, in fact, price can get above the August 1st, 2017 swing point. And in which case, then what that would do is here's your A to B equals CD price projection on that. Not saying that this is what the outcome is going to be, especially with it trading below resistance. But if it did get above my red line, if it did get above the top of the daily box, you'd be looking at about $1.74 out there. So that's what I see on gasoline out here. Looks like we got to everybody's questions, which is a good thing out there. So the market's just a quick follow-up. Where are we at? Just kind of flattish out here. No really good signals. If there was a good signal that was going to occur as well, in the S&P 500, we know we're going to wait for that test. Inside the Russell 2000, you can see that it has formed that four-river morning star pattern out here, but price has not been able to close above its red line. That's 1373 is what we'll call it in the daily contract for the Russell T and F. Folks, stay tuned. Your favorite polar bear of mine, David White's up next. After that, Tom O'Brien from 3 to 5. And then you've got Andy Heck to take it on home. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.